Looking at the performance of the stock market, Safaricom was one of the key movers yesterday, rising about 2.5%.
Yeah.
And we've been seeing a lot of activity in that stock. Year to date, it has risen 61%.
Yeah.
What is driving the stock?
I think a lot of speculation around the move yesterday was really some announcement that came out that M-Shwari transactions had actually increased and were slightly ahead of analyst targets for the year. And I think a lot of market players are now readjusting their models and trying to see to what extent actually M-Shwari is going to be contributing to both revenue and the bottom line from here on. I think there's also some speculation around the dividend booking date. The record date is probably sometime, it is mid this month, probably sometime next week. And I think some investors are also positioning just to take advantage of that as well.
Mm-hmm. Yeah. Talking of M-Shwari, which is their virtual banking transaction platform, it did increase tenfold, as you mentioned, to about 38.8 billion shillings for the first 7 months of the year.
Yeah.
Do you see that as one of the key drivers? If you're to compare that to M-Pesa as a component of M-Pesa, where do you see the greatest growth?
I think it's actually quite interesting in terms of just your average percentage numbers. Then obviously M-Shwari is going to have a much higher growth rate because it's coming off of a low base. I think M-Pesa has a lot more potential in terms of it's really more of a money transfer service, and there's actually very little at risk here as opposed to M-Shwari, where actually there's someone somewhere along the value chain who's actually putting down some money with the expectation that it will be repaid back. In terms of contributing to revenues, I don't know, it should actually be interesting to see what the penetration rate M-Shwari is going to achieve in the market. But just based on what we've seen from other sort of financial service intermediaries, the banks, and I guess the micro lenders, M-Shwari certainly is a product that's going to have a lot of appeal across the board for Kenyans.
And of course, we've seen also a lot of other products riding on the M-Pesa platform coming in. For instance, businesses are able to pay for either to their suppliers through the same platform, and also the additional one that they had recently, I think about last week, whereby now tenants can be able to pay their rent through M-Pesa. Now, looking at it holistically, where do you see the revenues in the next 2, 3, 5 years?
I think it's actually quite interesting if you were to take like a cross section of all the telcos that are listed across the board. So if it's Maroc Telecom in Morocco all the way to MTN down in South Africa, the game changer for all these guys would be whether they can get mobile money right. I think in as far as banking penetration is concerned, Kenya has proven the strategy works. If you look at Equity Bank and that particular model, and I think as far as mobile money is concerned, then M-Shwari and M-Pesa certainly have contributed to Safaricom's growth. So you probably want to see, I think probably within the next 3 to 5 years, I can't really speculate at this point, but certainly you're very likely to see that a lot of these sort of initiatives to try and take advantage of the financial services industry are going to contribute to at least 30–40% of revenues, certainly as you go further down the line. But there's very likely you'll see a decrease in the dependence from your traditional sort of like voice and non-voice and data, when suddenly more contribution coming from financial intermediation.
All right, now let's cross over to Kenya Airways, which is set to receive its first of the 777 Boeings that they expect, and the first one will come in October. It's going to be one of the biggest planes that they have, with a capacity of about 400 passengers, and this is for direct flights to Guangzhou, China. And if you recall, this was on the back of the president's visit to China, and he mentioned that you're likely to have those flights also to Beijing. For you, what's your thought in terms of the expansion strategy for Kenya Airways, and also the fact that they're now getting the fleet that they require for that expansion?
Yeah, I think it's really been a long time coming. And in terms of delivery, I mean, a lot of these, sort of capital investments have a relatively long lead time. So the period in which they actually did the rights issue and they raised the debt and they ordered for the airplanes, a lot of the investors really haven't seen that sort of return in profitability from the equity injection that they supported the company with. In as far as the trade route to China is concerned, it's actually quite important. China, Africa trade is actually growing quite rapidly as compared to some of our other neighbors. I mean, there's talk of, the rupee has actually been quite weak now, and basically there's been a lot of speculation around whether China will become a more important trading partner going forward. I think for them it's more of actually like an intermediate strategy that should pay off. Those actually, I do remember during the investor briefing, the CEO did mention that they were trying to see how they could actually just increase in terms of utilization, just having more a wider berth so they can still carry cargo and passenger, and so you have freight and passenger routes going all the way. So I think it's really an important step for them. I'm not sure it's going to have any real sort of impact on the share price immediately. It's only one plane, but certainly it shows that the strategy is still being implemented, and I think that should be a positive for shareholders.
And of course, besides the trade, they're also looking at business parallels. If you look at the Kenya Tourism Board strategy, they're also really eyeing China as one of the markets that they hope to actually show up tourism numbers. And looking at trade between Kenya, India, Kenya, China, we are seeing actually more activity this year coming in from the Indian counterpart instead of as opposed to China. What's your thought in terms of the trade relations that we're likely to see going ahead?
I think it obviously it helps that there's fairly large Asian contingent that is local in the country, and because of the sort of links that they can able to exploit, then obviously you would expect that there's that preference to trade more with India. I think also there's the part that actually the currency helps a bit. The shilling actually was quite robust against the dollar for the first half of the year. We've seen a bit of weakness now, but the rupee has really more or less just really been on free fall. And I think the sort of anybody who is trying to look at where do I get my product for import, then would probably choose where they can get the most bang for their shilling, and I think that's really been the rupee. All right, sorry. Now looking at the debt market, we have the central bank saying this morning that they're going to auction a 12-year fixed bond, treasury bond, and this is for infrastructure, and they're hoping to raise 20 billion shillings at about 11%. What's your thought on the coupon rate of 11%, given that you have the benchmark 91-day T-bill at about 10.4%? Yeah, I mean, it's unlikely that it would clear at those levels. Personally, I think it's very likely that the bond probably sell off at a bit of a discount. But again, you also have to remember the fact that the being an infrastructure bond, there's the issue of tax exemption from the interest income. So if you actually just to sort of try to back out what the effective tax yield would be, then you see it would more or less play around levels where market players would be comfortable. I think in as far as what demand we've seen on the last paper, which is the IFB 1112, commonly known as IFB 5, there's actually been a lot of demand for it. It's been one of the most liquid sort of bonds in the market, and I think right now there's a bit of a supply issue. Someone has tried to corner the market, so actually just this particular sale should have an effect, and also should see a lot more activity on it as one strategy is to probably try to roll from the more recent issue on the run to the other one. So I think net
to be a counterbalance.
Yeah, I think there's going to be quite some good demand, but it could probably clear much higher than 11. Okay, that's in fact that now preempts my second question, which is with regards to inflation. We've seen it ticking up in the last 3 months, rising by about 65 basis points last month. And is the 11% factoring in the anticipated rise in inflation? Yeah, that's a good question. I think you'd probably want to look at also where it's trading at on the yield curve. I think a lot of investors will be factoring in what longer term inflation would be. So it's very likely that the sort of volatility that we'll see now and probably going forward on the CPI is partly because to structural factors like you've brought in your VAT, again you're working with a relatively lower base, so you're probably going to see a bit of an increase there. But in the longer term, I think most investors work from the point of view that you expect a central bank will actually be able to hit the inflation target and then work backwards. So if the central bank has specified that they're looking at 7%, maybe plus or minus a certain margin, maybe 200 basis points, then that's the sort of level that most investors will look at and factor in. In the short term, inflation is going to have an impact in as far as how it's going to trade. But I think when an investor is probably going in, you look at 12.2% for a 12-year paper, it's really not too bad a yield. So it's more of a wait and see? Yes, it really is more of a wait and see. I think certainly should be interesting to see what the outcome would be, but the general outlook on what the debt levels the country is probably going to see within the next 3 to 5 years. I mean, you're expecting a lot more revenue coming from different areas, including like oil and gas and all this, and net, it certainly looks more attractive. Okay, we seem to have run out of time, but it's a discussion that we can pick up sometime later. Yeah, definitely. David, that's it from me on the Kenyan markets. Back